going on, everybody? This is David. Welcome back to the channel. As always, remember to like, share, subscribe, hit that notification bell. I would really appreciate it. Helps the channel grow. And if you'd like to make a donation to the channel, information is below. That's also really appreciated. Any donations will definitely go back to the channel and helping the channel grow. So now we got the preliminaries out the way. Let's get right into the details here. Hold on for me 1 second. Let's jump right into it. And you see last week on Friday, the 21st, the Dow closed up 22 points, up, not even 1%. So almost kind of flat for the day. Over the last week, you see the Dow was down 0.33%, down 112 points. But year to date, the Dow still up 2%, up over 670 points. Still holding pretty strong right now. So despite all the recession talks and stock market crash, I think the Dow still holding pretty strong for the year. So that's good news. And for the S&P, we see that the Dow was up just 3 points on Friday. So that's pretty much an even day, right? It's flat. Not bad. The S&P is still over 4,100. Like I say every week, analysts will call it to go down to 32. But over the last week, Dow's pretty much flat, only down 5 points. Year to date, the S&P is up 8%, up over 300 points. So still holding strong for the year to date. Can't complain about that. Then we head over to the NASDAQ. And you see the NASDAQ, once again, pretty flat on the day, only up 12 points. For the last week, down 50 points, holding strong over 12,000 right now. And year to date, still up 16%. So, if you follow the NASDAQ last year, it took a pretty big hit. So it's still trying to recover some of those gains from the previous year. And this week coming up is a big week, right? You have your earnings week with your tech stocks. So the big boys are going to play this week, and that's going to, I think, have a big impact not only on the Dow and the S&P, but definitely the NASDAQ for sure. It's going to be affected pretty heavily by what goes on in the market this week in regards to the earnings calls. So the earnings report. So let's take a look and see 4 companies that pretty much are heavily affect how the market runs. Let's take a look and see what those earnings dates will be. And for this, we usually look at Yahoo Finance. So let's take a look here. The easy way. If you own stocks, you should definitely keep up with when your company's reporting their earnings. So the Alphabet, which is Google, you see right here, their earnings report or their earnings date is April 25th. So it's this upcoming week. You're going to see how the company did their first quarter and what their projections are for the future. And that's going to heavily impact the price of the stock. So let's see. That's Google. Another big player is Apple. Let's take a look at Apple. They are reporting. Oh, okay. They're not this week. They're actually May 4th. So you still got some time on Apple. But if you're an Apple shareholder like myself, you are waiting for this date. So let's see what else we got. Amazon, major players in the NASDAQ, and they are reporting the 27th. So that is Thursday, the 27th. So definitely going to keep my eye on the 27th to see what Amazon's first quarter report was, and also Meta. Meta is reporting on Wednesday, the 26th. So definitely want to keep our eye on that. Facebook, um, been recovering pretty strong this year. I'm actually not mad at how they're performing this year. You can see year to date on their chart and how it's moving after taking a big hit last year. So you're seeing it's starting to recover. And then another one, look at Microsoft. I'm not sure if they're reporting this week or not. Yeah, they are the 25th. So this is a big week. Apple's not reporting this week, but you got Google, you got Amazon, you got Meta, you got Microsoft, all reporting this week. And these companies are definitely are heavily in the NASDAQ. So you're going to see some big movement this week, probably based off how these earnings reports come out. So let's keep our eye on that. And like I said, if you're a shareholder, you own stocks, you need to be aware of when your company reports their earnings. A good way to know, they most companies basically they report every quarter, and once the quarter ends, right, March 31st with the end of the first quarter, you need to be on the lookout of when these companies report their earnings. Yahoo Finance is a good place to go to check on that. So that's exactly what we just did. So yeah, we want to keep our eye out on that. And let's see, we have some other news going on I want to touch on. Been talking about it the last few videos, and I'm going to keep talking about it, right? The importance of artificial intelligence, AI. If you guys are not keeping up with AI, you're doing yourself a disservice, because it's definitely the future. Is how the future of how what the world is coming to and how things are going to be ran. It's going to affect a lot of people, probably going to affect a lot of jobs. So if you guys are not opening your eyes and your ears up to the importance of artificial intelligence, you're really doing yourself a disservice. So I ran across an article I just wanted to pull up and share with you guys. Let's see here. CNBC, how AI powered robots are changing retail. So it's coming, man. It's coming. And you see here, you can go watch the video. It's how the robots could save retailers billions of dollars. So just to read a little bit, eager to boost sales, relieve workers from mundane tasks, and respond to ongoing labor shortage. Retailers and supermarkets are adding robots to their store aisles, outfitted with cameras and sensors, autonomous inventory robots that can verify price signs and look for out of stock items are being deployed at big box stores like BJ's Wholesale and Walmart owned Sam's Club. And you can go read the rest of the article, but you see what's going on here. Bodies are being replaced. Robots are starting to come in to pretty much change the game. It's going to be here to change the way we do things, and you guys have to be up to speed on what's going on, or you're going to get ran over. It's just like how we say with our parents, and they're not up to date on technology. Well, this is our time to get up to date on what's going to be around in the future. So if you guys are not, like I said, reading up and understanding the importance of artificial intelligence, you are doing yourself a major disservice. A major disservice. So, man, it's about to get real. It's about to get real, and you're either going to be with it or you're going to get rolled over. Keep that in mind. So, and one more thing I want to share with you guys, some news that just came out. Let's see here. Pretty big news, actually. Bed Bath & Beyond files for bankruptcy protection after failed turnaround efforts. Wow, that's pretty huge. Bed Bath & Beyond files for bankruptcy protection after failed turnaround efforts. You can see a little bit of the key points of the article here. Bed Bath & Beyond filed for bankruptcy protection. The struggling home goods retailer has been warning of a potential bankruptcy since early January. The company's 360 namesake stores and 120 Bye Baby locations will remain open as it begins to wind down the business and liquidate its assets. Wow, that's huge news. Huge news from Bed Bath & Beyond. It kind of gave a pre-warning earlier this year, but as of today, it's official. On Sunday, filed for Chapter 11 bankruptcy protection after it failed in several last-ditch efforts to raise enough money to keep the company alive. Wow. And you see the beleaguered home goods retailer has been warning of a potential bankruptcy since early January when it issued a going concern notice that it may not have the cash to cover expenses after a dismal holiday season. And you see shares of the company closed at 29 cents Friday, giving a market value of 136.9 million. The stock is down almost about 88% this year. Last April, it was trading at $20 a share. Wow. So, yeah, that's it. Bed Bath & Beyond is on the way out. On the way out. And online, it's just been online shopping, Amazon. Man, it's definitely leaving its mark on the industry. So, yeah, so we're seeing the end of Bed Bath & Beyond. And, I'm not surprised. It's going to be other businesses probably going to face the same fate. And, it's kind of hard to compete with this online world. And if you're not making an effort to shift your business online, man, you're in trouble. The brick and mortar stores are in trouble. But yeah, now that we got that out the way, let's take a look at our challenges that we have going on. We are in week 16 of our investing challenges with JEPI and JEPQ, with SCHD and VOO. So, without further ado, let's get right into it. Take a look and see where we at. Boom, let's start with SCHD VOO. And you see right here, we are in week 16. We just completed the week 16 challenge where we invested $16 in the SCHD. We invested $16 in the VOO for a total of $32 for the week. And if you see up here, the total invested in this challenge for the year so far is $272. So it's starting to build up. It's starting to build up, and we're over 8 shares of VOO now, and we are over 16 shares of SCHD. So I already had positions before I started this challenge. So this challenge is to help grow my positions in each fund, and and allow me to be consistent in investing into ETFs that probably my 2 favorite ETFs right now. So we are in week 6. We just completed week 16, and with this challenge, whatever week we in, that's the amount of money we're going to invest into the challenge. So you see next week is going to be week 17. So we're going to do $17 in the SCHD. We're going to do $17 in the VOO, which should be $34, but that'll come next Friday. But yeah, we are, man, we're killing this challenge. We're going to go all the way to week 52. And we are, we getting close to being halfway there. So it's just about consistency, and keep doing what we're doing. So I hope you guys are following along. If you're not participating, or if you have your own challenge, that's great on your end. But this challenge is to help me stay consistent on investing into funds that I like. So let's hop over to the JEPQ challenge, and this is an easy $5 a week challenge. So last week we did $5 in the JEPI, we did $5 in the JEPQ, $10 a week into this challenge. Overall, we are $140 in on this challenge. We didn't start the first week in Jeppy. We started week 2, so on down every week. We've done $5 in the Jeppy. We started in JEPQ week 4, and every week $5 in the each. And you see where we at. Total $140 for the year so far in this challenge. And you saw what we did with SCHD. So, it adds up. If you are consistent in your investing, which is very important, then, you can build positions fairly quickly. So you see so far in Jeppy, we've done $75 just from the $5 a week challenge. And with JEPQ, we've done $65. So, which both is more to cover a share. So we're going to keep doing this challenge. We're going to keep our investing challenges going. Quickly over to our cover calls. We actually sold a cover call this week for Amazon. Got to be careful because I just mentioned we have earnings coming up, so we had made a quick $100 real quick, and we'll see how that goes with our cover call expiring on the 28th, 116, 116 price, strike price. I think Amazon's trading at 106 right now, so we'll see how that turns out for us. But I like that. We want our cover calls to expire worthless, so we can keep the full amount of the profit. So got a premium. So yeah, but that's it, man. That's all what we have this week. All eyes are going to be on the earnings next week. We'll see how that goes. It's going to heavily impact the market. The big boys are coming out this week. Amazon, Google, Microsoft, Meta. Then the following week, we're going to have Apple, which is, to me, the top dog. And, we're going to see how the market is looking after those earnings. Experts are predicting a earnings recession. So, pull back after the results of the earnings. But, we'll see. We'll see. I'm not one way or the other. I'm kind of like, let's see what's going to happen. Let's see how the market reacts to how the big companies did in the first quarter. So I'll be watching. Hope you guys are watching. Hope you guys are investing. And, remember to always, on your way out, remember to like, share, subscribe, hit that notification bell. I would really appreciate it if you want to make a donation to the channel. Information is below. But until then, guys, I will talk to you later.